No, that's awesome. That's really well said because our generation, so I'm a little bit younger, I'm 27. Our generation sees investment vehicles dwindling before our eyes. Okay, so if you're going to buy the S&P or the Nasdaq at the highs of the market right now, how much potential do you really have over the next 10, 15 years? Maybe it's modest. Real estate is out of the question, right? Home prices are too high, interest rates are too high, so that investment vehicle has been taken away. So it really seems like we have few options, and crypto seems to be one of the only options for the Gen Z and millennials to be able to build a wealth creation vehicle. Do you see it the same way, or do you think that crypto is not going to be that vehicle for this generation?
It's like everything, right? So on a macro basis, global liquidity determines returns for many asset classes, if not all of them. And so if all of a sudden there's a bunch more money pumped into the system, interest rates are brought down, real estate will go up a lot, stocks will go up a lot, right? Crypto will go up a lot, all of it will. Um, Over the last 18 months or so, we've been in the exact opposite situation, which has been we have seen liquidity drained from the system, right? We've seen actually selling of assets off central bank balance sheets. And so asset prices went down. If you said to me, okay, let's just say it's all one big trade of global liquidity, prices go up, prices go down based on that global liquidity, then really what you want to be able to do is you want to be able to build a portfolio that allows you to get exposure on a risk basis, according to whatever your personal situation is, right? So some people, especially if they're younger, can take way more risk. But if
Right.
you're, 75 years old, you can't take that much risk because you need the money now. Right. And so you're actually much more in a defensive mode. The reason why that becomes interesting is if we go back and we look at 2020, there were some studies done on portfolios at some of the large brokerage houses. Most of the people who sold in March and April that kind of shaken out of their stock positions were older people closer to retirement. And the reason being, from my, kind of maybe assumption, is if you saw 2008, 2009, and you realize it took 3, 4, 5, 6 years for those stock prices to come back, you see prices crashing, you're like, screw it, I'll take a 20% haircut, but give me my money, right? Because
Right.
I need this to live this year, next year, the year after. I don't have time to wait a decade for this stuff to come back if that's how long it takes. Now, of course, as we know, the government stepped in and stock prices were back within months. And so it's unfortunate, but human psychology, kind of takes over. And that's why we get dislocations in the market. That's where markets are made between people who are long and short. And I tend to think that's no different than it's been for centuries, before any of us were alive.